Good afternoon and welcome to the XAAR PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and publish responses where it's appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to John Mills, CEO. Good afternoon, sir.
Hi, thank you very much. And first of all, thank you everybody for taking the time to come along and listen to the story of XAAR. For some people who will have known XAAR from old, I just wanted to kind of quickly run through some of the history and some of the things that would have characterized XAAR historically, and hopefully how XAAR today contrasts with that. So if you go back to 2013, XAAR was a FTSE 250 company. It had 140 million of revenue, made 42 million profit, market cap of around about $1 billion. But it was effectively a single product into a single market, and that was ceramics. And that market, XAAR lost that market for various reasons, and left the company really with no other revenue streams. And over the last decade, it's really been recovering from that situation. In contrast, today I've been with the company now for 6 years, and we've really focused on making sure that we have a broad portfolio of applications based around a value proposition which is unique to XAAR. And really what I would like you to take away with today is really two things. Firstly, that we have a unique capability to print fluids that no one else can, and that we deploy that capability across a broad range of applications which potentially give us significant revenue opportunity and indeed quite significant resilience against any individual market problems. So in order to first of all explain to you what the value proposition of the business is, we make industrial inkjet printers and print heads, and we compete with companies like Epson and Fuji, XAAR, Ricoh, Konica Minolta, Seiko. These are huge Japanese corporations with global reach and substantially lower manufacturing costs than we have. And I think that the challenge and the problem for XAAR over the previous 15, maybe 20 years is trying to compete with these companies on their home territory is incredibly difficult, and ultimately XAAR has lost. And having joined the company in back in 2019, I, having known the company for many years, really focused on the attribute that XAAR had, which was unique, which is that we can print fluids that no one else can. And that parameter that's really important is viscosity. And viscosity is a measure of how thick the fluid is. So water has a viscosity of 1, cream is 22, olive oil is 65, and yogurt all the way up at 1,000. So if you take the global number one, Epson, they can go up to around about 8 centipoise. So and some of the other competitors may be able to get over 20 and approaching 30, but really that will probably be a generous assessment. We've got applications well over 100, and therefore we have this capability of printing fluids that no one else can print. And the way to think about that is that if you have a fluid, if you want to add things into the fluid to add functionality to the fluid, the more you add in to the fluid, the more functionality you will have. But the more you add in, the more viscous, the thicker the material, the fluid is likely to become. So there is a correlation between functionality and viscosity. So the more functional the fluid, typically the thicker, the more higher the viscosity is. And therefore, what we are saying at XAAR is we can print fluids that are far more functional than other printhead manufacturers. And so the question then remains is, well, what do you do with that? And what I'd like to do today is just share with you some of the applications that that utilize this unique capability, so you can see the sort of the breadth of applications that we are currently operating in. So the first one is decorating of cars. So today, if you want to put a graphic on a car, you need to use a sticker. If anybody has a Mini or know somebody with a new Mini, typically they have some form of graphic on there that's a sticker, and those are not really well liked in the industry. So if you want to put graphics on there, that's pretty much the only way you can do that. We started working with XAAR, who are one of the major global suppliers of car paint to the industry, and also XAAR, who make robots, and 50% of the world's paint shops have XAAR robots in them. And collectively, we have created a technology called NextJet, and this allows you to digitally print graphics onto cars. So if you see the bottom right hand corner, we're printing on the side of a door, and you could imagine that if we had a low viscosity watery fluid, then that would actually just drip and run down the side of the car, and you would not be able to print graphics on a vertical surface. And so it's what I hope is clear from this, that you actually need to have high viscosity capability to be able to print graphics onto vertical surfaces in this application. And so there's no other printhead that can do this, and we've enabled an industry to adopt digital technology through our ability to print high viscosity fluids. Just to go through another application. So this is car batteries. So this is another application where we started working with the battery industry about 5 years ago. There are issues around battery safety, and one of the contributory factors to this is that the insulation layer, the blue plastic film that goes around the battery to provide electrical insulation, can be damaged through mechanical rubbing or through heat cycling of the battery as it's charged and then utilized. Having developed a fluid which is UV curable, you print on the battery, you shine UV light on it, and it turns into a plastic. This coating is non-flammable, it's much stronger, it doesn't crack, and it has better peel strength away from the battery. So this is a better solution than the wrapping of the battery. As of today, we have 3 OEMs who we sell printheads to. They've built machines that print the battery. You see one of those operated on the bottom left-hand side of the video, and there are now 10 production lines in China that are making batteries on a daily basis for cars. To give you some sense of scale, we have about £150,000 worth of revenue for each production line. There's 10 in there at the moment, and we expect another 10 to 15 going in this year. and overall, there are 1,300 production lines in China. And so if the industry adopts this fully and changes all of the production lines to this digital coating, that would represent around about 200 million of revenue for us. And if they did that over a 5-year period, that would be, a good volume of revenue per year. For each of the applications that we have, there's a secondary revenue stream, which is from a replacement printhead cycle. So once you have an installed base, depending on the life of the printhead in that application, and that's a function of the type of fluid and the environment it works in. And in this application, the life of the battery may be the life of the printhead may be, say, 4 years. Then every year you would expect to replace 25% of your printheads. What that means is if you have an installed base of 200 million £500 worth of print heads, then 25% would get replaced on an annual basis. So, and that's the same across all industries. So you have revenue of print heads going in through new machines, and then depending on the replacement cycle, you have an annuity revenue from the replacement and print heads. So that's the battery coating. Change of tact. If anybody has a desktop 3D printer, it's probably in, for those who recognize the term, an FDM printer, which is like a roll of fishing line that essentially goes through a nozzle and heats up, and basically an arm scribes a path around, and the fiber sticks to the fiber that was previously laid down, and that way you build up a 3D model. And it typically is one color or a couple of colors, and it's not very high resolution, and that's that's the typical 3D printer that's bought today. But there are 5 million of those printers bought every year. If you want to print something high resolution in full color, so things like you see on the bottom of the screen, all the things on the table next to the machine, and the little farm on the left hand side, if you want to print high resolution things of that nature, you probably have to pay somewhere between 40 and 150,000 pounds for an industrial machine. We've been working with Flash Forge. They're one of the major suppliers of the desktop 3D printers. They sold 700,000 units last year. We have been working with them to develop the world's first desktop 3D printer. We estimate that printer will be on sale for around about £2,500 to £3,000. And with the occurrence now of AI, you can take a photograph of somebody or any object. AI will render that into a 3D model, and you can print it out on the printer. Equally, you can describe something into AI, and it will create the figure for you. So hobbyists around the world will be able to print whatever they would like to fulfill their needs in their hobby. So just if you have the opportunity, if you were to Google FlashForge CJ270, you'll be able to see the pre-marketing, pre-launch, which we expect to be in the next few months. It's actually been shown at multiple trade shows to date, ahead of the launch later this year. So I'll just play you the promotional video for the product. And just to give you some sense of scale, there are 500,000 desktop printers are sold each year. If 1% of the market were to buy this machine, that would represent 25 million of revenue for XAAR. What we don't know, because it's a brand new product into the market, is exactly how many units will be sold. So we're quite excited about this. But the exact number is very difficult to predict. So we will look forward to launch and and see how many it does sell. One of the things that's really impacted the numbers this year, we started working with the wax industry about 4 years ago. This is an industry which uses wax to create bespoke, high quality jewelry in gold and platinum. What happens here is that the wax is actually heated up and melts, and then you inkjet print the wax onto a substrate, and you build up a facsimile of whatever you want in the gold or platinum in the wax. You then take that wax model and encase it in effectively like a plaster of Paris, and it dries. And then once it's dried, you then heat it up, the wax melts, and then runs out, and then you've left with the mold, and then you can pour your gold and platinum into the mold, and then once it's cooled down, you break the mold, and you've got your piece of jewelry. We've taken that market very quickly, because the ability to print a wax that's much better, much stronger than the previous wax means that you can produce higher quality, more intricate jewelry. So when this was actually launched by the first company, the quality of the jewelry that was produced was so differentiated that every single other OEM looked at that and said, we need to use our print heads because we won't be able to compete. So we went from 0 revenue in 23, we had around about 1 million revenue in 24, and then 8 million of revenue in 25. So we think we've got a sizable share of that market now. So we expect some growth in 26, but that's an example of a market where, again, we've taken market share purely down to the fact that we can print a better fluid than what was previously printed. The final application I'll show you today is on printing of cardboard. Probably all of you will receive Amazon packages. These are sort of cardboard boxes or sort of envelopes and they will all have a white plastic label with the address and the barcodes and other things on it. That's the plastic label that's on it is expensive, and it also makes it more challenging to recycle. And the reason for that is you can't print white ink digitally onto cardboard, because what happens is that it's low viscosity and it just soaks into the cardboard, which is what you see in the image at the top here. As it sinks in, it takes the pigment with it into the cardboard, and you can't see any of the white pigment left. Closer to us, lower down, you see that by contrast a high viscosity fluid, and that high viscosity fluid has less water, it's thicker, it doesn't soak into the cardboard, and therefore the pigment stays on the surface. So this gives us the opportunity to actually print digitally onto cardboard, which would be a significantly cheaper process, but also help with recycling. So again, this is just about the benefit of using a high viscosity fluid. So hopefully that's been helpful. What I'll do now is hand over to Paul, who can take you through some of the financials.
Thank you, John. Yes, okay. I'm not going to plow through the slide by slide. If you want to see that, it's available on our website. But what I would like to do is just highlight some key financial numbers that we've delivered and talk about the shape of the numbers going forward over the medium term. So first of all, the group is organised into 3 divisions. The largest one with the greatest scale, is Printhead. And then we have Megnajet, which is predominantly dealing in producing ink systems. And then we have EPS in the United States, which builds machines for high-speed single-pass printing direct-to-shape purposes. And you look how they performed 2025 versus 2024. Overall, the group is up 12% year on year, but Printhead revenues standout performance at 22% up versus the prior year. And that performance is driven, as John has alluded to, primarily from the wax segment, the growth there. And actually that 22% revenue growth, over half of it was a volume increase. And so more about that and its effects on our numbers in a moment. Megnajet broadly flat 2% and EPS down 10%. And the reason for that was they had a large multi-year contract to basically print on golf balls. And that came to a sudden unexpected end at the beginning of last year. And the then management team hadn't yet built a sufficient pipeline to backfill that loss of contract. So we have had a dip in performance there, but we brought in new management, and interestingly, despite that 10% reduction in revenue, the gross margin at EPS grew by 300 basis points, and that is as a result of restructuring, cost out initiatives, and so on and so forth. So the new manager has dealt with that. He's dealt with a number of intractable issues, and he's also rebuilt that pipeline. And one of the attributes of EPS is the way revenue is recognized. You kind of know 6 months ahead of time how much revenue you're going to have. So EPS is very much back into growth mode and will, I'm sure, continue growing, continue performing financially very well. And then back to Printhead, as we said, 22% up, and that also came with 300 basis points increase in gross margin. And that is a key attribute of this business, which is that we have a very effective operational gearing effect. If volume does increase, then margin will increase too. So let's talk about first number, how we see that, how that's going to develop over the medium term. 40% gross margin overall. I had a look back, by the way, I've been in XAAR just over a year. I had a look back over its history, and the high watermark in terms of gross margin performance was probably about a decade ago, where it was nudging 50%, high 40s certainly. Now you've got to be a bit careful making that comparison with them, because of course it's apples and pears, and revenue was made up of different constituent parts. But nevertheless, 50% does seem to be a laudable target to get back to. And so the current management team, we're now all working towards that over the medium term, increasing that gross margin. And yes, operational gearing will help if the business grows, the volume increases. But also we are looking at cost out initiatives. We'll be looking at procurement, better procurement initiatives. And we've also shifted part of our supply chain to China to be closer to our customers. I describe it as a sort of ancillary activities. It's not the core IP activities that go into China. And inkjet systems construction also in China. So 2 benefits of that: will be closer to the customer base, the Chinese customer base, but also it will take a lot of cost out of our base. So yeah, 50% is, we've set ourselves that medium-term goal to get as close to that as possible. I think another thing I'd like to talk about is the balance sheet and how that's shaping up. So it's true to say that in recent years, XAAR has held elevated levels of inventory. I'm not interested why that was, but it's a fact, and it does need addressing. So we are setting ourselves the goal of, and I've done this in other companies I've worked in, of if you like, a continuous improvement goal of increasing stock turn year in, year out, minimum of a half turn increase, preferably a 1 turn increase every year, and rather than just obsessing about a particular absolute number. Stock turn has the benefit of being linked to how the business is performing, how the business is growing. And I see that as a way to free up more cash and get into that sort of virtuous circle of investing more, growing more, et cetera, et cetera. So that's something else perhaps you should look out for going forward with XAAR. In terms of investing in growth, a couple of things there. We spend about 8 to 10% of our revenue on R&D, and that feels about the right number, at the right level. And in terms of capital expenditure, we have had last year elevated levels of CapEx, but that was investing in capability to basically speed up sales and to deal with some bottlenecks. And I think going forward, you could expect slightly higher elevated levels of CapEx too, just to invest in growth, but also perhaps also to deal with some legacy issues in terms of replenishment of the asset base in the factory that we do need to address. So look, I hope that gave a bit of a flavour for the business, I'll hand back to John.
Good. I mean, it's quite difficult to judge these things when you can't see the audience. So hopefully that's giving you a sense of the company. I think the summary for me about the business is that when I go around and talk to particularly institutional investors, many of them have know XAAR, and one of their concerns is that XAAR has historically been boom and bust, and very difficult to predict the future revenues. I think what we'd say today is that we've worked hard on making sure that we have a very clear value proposition, and we only enter into markets where we have a unique and clear value proposition against the competition, and that we now have 21 separate markets where we derive revenue, and we have in most of those many customers and a strong pipeline of applications that are coming through. So we feel confident about the business model, and we feel confident about the revenue growth over the coming years. What's very difficult to predict is the detail of when any individual application will land, and therefore we tried to avoid talking about specifics of timing. But I think the key thing is that over time, the ones that are in the pipeline will come through. So for those who've got a slightly longer time horizon in the sort of 3 to 5 years, I think it'd be, where we are today, it's difficult to see how we're not going to grow revenue substantially over that time. And with the operational gearing, we should see some of that falling through to the bottom line. So with that, I think we'll look at any questions that we have. So I can currently see 4 questions that have come through. So please write any questions in the thing, and we'll do our best to answer them. We have a bit of time left over, so we can hopefully answer those questions as we go through. So I'll take them. First question: do we have any collaboration with TerraView? No, we don't at the moment. It's interesting that we're now starting to see companies coming to us once they understand our capabilities. So maybe that's something we should pursue. The second question is there with the 22% increasing in print head revenues, how much is initial system adoption versus recurring? That's from Matt. I think the revenues that we see coming in, we would describe as all recurring revenues. What we would normally see is that you have several years where you sell print heads into an OEM as they start developing machines and selling machines. Eventually you get to a level of saturation where everybody who needs a machine has got one, and then you're left to replacement cycle of the machine, and you're left to growth within that market, and then it's the replacement heads for your install base. So the revenue would peak after a number of years, and then would move into a steady state where there will be slower growth. It might fall back by 20-30%. So that's how we tend to think about it, and therefore when we model revenues, we look at layering on the different applications. And so we take sort of fairly modest views of growth after the initial market size, and try and layer that on. So hopefully that answers the question. The second question is how visible are revenue levels over coming years from the new application areas? And again, this is it's a really good question, and one of the fundamental ones for understanding the business. We sell print heads to OEMs, and if you take the battery situation, we sell print heads to OEMs who make the digital printers. They sell the digital printers to companies that develop production lines for the battery manufacturers, and the battery manufacturers buy the production line. So we're three companies removed from the decision makers in relation to the batteries, and therefore we're not having direct conversations with the battery companies. We take our information from a number of sources and try and integrate that together to create a picture of what we think is going to happen. So it's incomplete. We are not selling machines directly to an end user. So so in many cases, our information is not perfect. In that we do our best to try and understand forecasting, and we ask our OEMs for forecasts and what they believe are going to happen, and we have to interpret that in the best way that we can for planning. Typically, things usually take longer. The numbers that get delivered are usually smaller, and we try to take that into account when we look at any forecast that we publish. Next question I have is that the revenue opportunities for battery coating and 3D printing, are those annual revenue fit? How does the drop through margins in each section differ? Yeah, very good question. I think on the 3D on all of the, as I said earlier, on all of the applications, we really are looking at recurring revenue. We don't see any revenue that comes in for a single year and then stops. So the revenues we talk about should be recurring revenues. The margins are quite different across different market sectors. The wax and the battery coating, the margins are quite strong. If you look at the consumer market, the desktop 3D, the margins are much lower in those areas. So we tend to try and price to value rather than looking at competitive pricing, and we try to maintain margins on the basis that we are enabling industries to do things they previously couldn't do. We're not competing on price in many of these markets. So and in terms of drop through, this year we did 0.8 million profit on the revenues. As the top line grows, we're now at that kind of break even point with the factory. So as we go forward, we should see more of that revenue dropping through. Okay, next question is around IP from Paul. The IP protection, particularly as we are exposing the technology in China. Yeah, really good question. We have very strong IP, but our strategy is to patent according to GDP. So we take the top 6-7 countries, excluding China, and we patent in those countries. And the reason we do that is that I think if we have a Chinese company, for instance, that did infringe our IP, we may find it difficult to enforce our IP in China. However, if those companies then build a print head and sell that print head outside of China into a territory where we have IP, then whoever uses that print head is infringing our IP, and therefore we can send a cease and desist. So our strategy is to enforce it in territories where we are able to kind of follow up and prosecute our IP effectively. So that's really what we would do. Somehow all the questions have disappeared.
You've answered them, I think.
Hopefully, is there any more questions that we could? I'm going to let you take that one, Paul.
Yeah. Okay. So we obviously have a medium-term strategic plan, which we've not yet made.
They don't see the questions, Paul. So you probably have to read the question.
Oh, yeah. Sorry. Thanks for the reminder. So the first question is, what level of turnover and profitability would you target in 3 to 5 years? So we obviously do have a medium-term strategic plan. It's been discussed at board level and all signed up to. You would expect to see the growth levels we've achieved last year of 12% for the group. According to our plans, that's not inconsistent with the sort of annual growth levels you could expect to see going forward. And in fact, if you look at the consensus numbers that are out there, the revenue growth is broadly consistent with that. So a sort of 10 and a bit percent growth in revenue going forward. And then as we've mentioned a couple of times, the operating leverage benefits will start to kick in as well with that volume growth. By the way, I expect at least half of that revenue growth will be volume, at least. And so as I said earlier, I am pushing for gross margins to be heading towards as close as possible 50%, and with an operating margin, in the high teens. That would be the sort of place I'd like to be in terms of profits and revenue. I think the next question is a congratulatory note, I think.
That's great. Thank you for answering all those questions you can from investors. And of course, the company can review all questions submitted today and will publish those responses on the Investor Meet Company platform. Just before redirecting investors to provide you with their feedback, which I know is particularly important to the company, John, could I please just ask you for a few closing comments?
Yeah, well, thank you very much for taking the time to come and listen to the story. We're quite excited about the business. It's been a bit of a grind for 5 years to build the pipeline, and to do that, we do feel we're in a position now where we're at a kind of inflection point, and we can see growth coming over the coming years. It's important to say with any of these applications, it's very, very difficult for us to predict the exact timing or volume of any individual application. So I wouldn't buy our shares on the basis of one particular application, but I'd encourage everybody to look at the broader value proposition of the unique capability of high viscosity fluids and the impact that has on industry, and the breadth of the opportunity that we have, because I think ultimately that will be the thing that drives consistent revenue growth over the coming years. So again, thank you very much for your attendance, and hopefully we see some of you joining the share register in the near future. Great. Thank you very much.
Thank you.
That's great. Thank you for updating investors today. Can I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This may take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team, we'd like to thank you for attending today's presentation, and good afternoon to you all.